If you've opened YouTube, Reddit, or Twitter in the last 48 hours, you've probably seen what's been going on with GTA 6. In the past 48 hours, we've seen a lot of leaks. We've seen leaked maps, development builds, new features, and a little bit of a spoiler for what's to come, especially within a couple weeks, the extended release of GTA 6, which will basically act as a massive third trailer, I believe, coming up to tell gamers and people around the world what to expect from probably the biggest game, definitely the biggest game in release history. So when these leaks came out, all these people, like the initial narrative was just that Rockstar's in crisis mode. Take-Two, their parent company, is about to take this catastrophic hit. But if you bring up Take-Two's stock chart, something strange is happening. Wall Street barely blinked, and while casual onlookers would think to see a company in chaos, institutional investors are treating this as virtually irrelevant. GTA 6, for those who don't know, Grand Theft Auto is probably one of the biggest gaming franchises in history. GTA 5 released in 2013 and has now been out for 13 years, and that's crazy to say, but it's probably masked one of the biggest games in history. I mean, everyone knows GTA 5 if you're a gamer, and even if you're not. And now GTA 6 is about to have even more of an impact. So let's get to looking over this, right? So bring up TTWO, Take-Two's ticker. When news of a major breach breaks, retail investors panic. You know, you would see an initial sell-off from traders reacting to headlines because the word hack sounds like this whole operational disaster, but it's not. So here's why institutional money. The funds that actually move market caps, don't really care about these game leaks, you know? I mean, a leak damages surprise, right? It does not damage demand. In traditional technology, if your initial software or unpatented algorithm gets leaked, yeah, your competitors can copy it. Can copy your product, undercut your work, and then you're screwed. You are. But in entertainment, especially with this game, Rockstar doesn't have the competitors who can replicate a decade of this engine development, world building, and thousands of hours of voice acting overnight. You know, this game's supposed to finally release in November 18th, I believe. So it doesn't really matter as much for them. That's what we have to understand. The demand for GTA 6 is what economists call inelastic. You know, whether a player sees a grainy, unrendered map on Reddit or not, their intent to purchase the product still exists. On November 18th, people will be lining up to still get GTA 6, myself included. So a lot of people are seeing these leaks online, and then they're saying, whoa, what's going on? You know, this doesn't look that good. There's too much going on. No one's gonna like this. Sometimes I saw a lot of people say, if you add too much salt to a dish, it can ruin the dish. But to also what I can see, I don't know what the validity of this statement is, but all these leaks are coming from a game build from 2023. So, you know, who knows what the game is going to look like come the Netflix extended look on the 27th, or with the actual game releases in November. So, let's look at the actual numbers driving the stock, right? Take-Two's management has consistently guided towards a massive breakout in net bookings for fiscal year 2027. Right now, they're projected around $8 billion and $8.2 billion. Wall Street analysts expect total revenue to hit around $8.4 billion, driven almost entirely by the commercial launch window, you know? Like, this game has unprecedented, it will have unprecedented impact on the financial and economic scheme of not just video games, but entertainment as a whole, you know? And just to put that into perspective, the entire company generated roughly $5.3 billion to $5.4 billion annual revenue in recent fiscal years. So that means like GTA 6 isn't just a product launch, it's going to be an instant multi-billion dollar revenue doubling event. So right now, looking at analysts, Consensus estimates are modeling roughly around 35 to 40 million units sold in just the first 12 months alone, just the first year. So then when you combine that with the industry expectations of an $80 baseline retail price, and then with the pre-orders, I know right now the fact is more people are buying the $100 Ultimate Edition than the $80 regular edition. Because, people are saying, okay, they've waited this long, might as well get the biggest package, right? Only for $20 difference, no problem. But that adds up over millions and tens of millions of people buying this game. So just on the unit economics alone, it guarantees profitability like almost immediately upon launch, right? So here's the biggest secret that a lot of people, when they're talking about this, miss about leaks. So box office sales are only the tip of the iceberg. Like GTA 5 has shipped over 200 million copies and generated nearly $10 billion in revenue. And all of this is like, yeah, you know what? They're from like that cash flow originally from the retail disc. But at the same time, it's from recurrent consumer spending. Microtransactions like shark cards, GTA Plus, the membership and everything. Like all this stuff has made more money for Take-Two and Rockstar Games than just the disc sales. Yes, that's made a fortune. But even more than that, they have a recurring cash flow, And then in just the recent quarters alone, reoccurring spending has made up 75 to 80% of Take-Two's total net bookings. So investors aren't buying Take-Two stock for a one-time purchase spike in November. They are buying into a digital economy that will generate a high margin cash flow every single quarter for the next 10 to 12 years, or for however long this game will be out. And going off GTA 5, yeah, it's probably going to be more than 10 years. So a leaked map or an unfinished build doesn't disrupt this entire ecosystem that Rockstar and Take-Two have created, So that brings us to the fundamental rule of finance. Bad PR is not the same as bad fundamentals. When you see a media firestorm around a company, always separate the operational destruction from the reputational noise. I mean, if servers were permanently erased or the source code was compromised in a way that would prevented launch, yeah, okay, you know what? The game gets delayed again. That would have happened. Who knows? Maybe even worse. That would be bad. No doubt about that. That would be bad. But a leak in development assets is just noise for the most part. Like right now, the stock is consolidating around the $240 level, and the vast majority of Wall Street analysts still maintain the buy or even strong buy ratings, with price targets pushing more than $300. Basically everywhere you look, they're saying that this stock is still very undervalued. So the market is signaling that the long-term thesis is completely intact. Like, you have to understand. What do you think? Is the market underestimating the reputational impact of these leaks? Or is Wall Street in the right to completely ignore the noise? What do you think? Let me know. You know what? I usually don't make videos like this. Matter of fact, I really haven't at all on this channel. But I want to get more into this because finance really interests me. I'm Dylan, and I hope you enjoyed watching. Again, if you have any questions, please let me know in the comments, and any other financial stories coming up, I'll try and cover. Thanks for watching, guys, and have a great night.